Hi everyone, I'm Lorenzo Di Mattia, manager of Hedge Invest Sibilla Macro Fund. I wanted to tell you what we have done in July and give you the outlook for the rest of the year. July was a positive month. We made about 50 basis points. Our view was pretty bearish. We expected a correction, especially in small caps and high beta, which is what we have shorted. We also bought some puts. Thank God we covered quickly because the bearish call was actually premature on the broad indices. I mean, the Russell did lose about 7%, so we exploited that. But for the rest, S&P and Nasdaq barely corrected and made new highs into August. So we are happy that we picked the right shorts and were profitable, even if the S&P and Nasdaq continue to go up. We continue to believe this is one of the biggest bubble in history, maybe the biggest, similar to 2000, maybe even more extreme. We see signs across the board, equity issuing, secondary offering, private equity inflow, cryptocurrency issuing, and of course valuations. This is the result of an enormous amount of liquidity and stimulus and participation of retail investors that with COVID, many lost their jobs, many other are on subsidies and unemployment benefits. They started trading with that money, and then the effect of social media amplified that. The idea of making easy money in the stock market went viral on social media. So this is 2000 on steroids. In 2000, it was the CNBC and the internet for the first time in history that increased the amount of market participants. This time is a lot more global, a lot bigger, but it's the same dynamic. So liquidity is actually shrinking despite what we hear. The stocks making new highs are less and less. Stocks making new lows are more and more. For example, Nasdaq is still making new highs. However, the more stocks making 52 weeks lows than making 52 weeks highs. That's usually a very bearish sign. The timing is not too accurate of these indicators, but within a month or two, we will certainly have a pretty big correction. Now, one factor that's complicating a bit, the identification of the timing of this correction and also the next bear market is the Delta variant. So the Delta variant led to a correction and some pessimism on sectors that are exposed, like reopening trades, aerospace, hotels, and this might actually delay the final top. So we probably will have a temporary correction, pretty broad, because the quality and defensive stocks are very stretched and they're losing momentum, and cyclical and reopening are exposed to the spreading of this Delta variant and probably the Lambda into the fall and are unable to take the leadership. So we will have a temporary correction due to this, probably 5 to 10%, and probably 15% in the higher beta and small caps. And then there is probably an interim phase where they will buy again cyclicals and bond yields will go up, and then we'll make a final top from which a bear market will start. So we will start to exploit this correction through the same thing we've done in July. We believe this time will be a lot more profitable because the correction will be bigger and longer lasting. And then there will be opportunities in reopening probably. Obviously, the assumption is that the virus doesn't last forever, but apparently there are these variants that are like the Lambda is even more immune to the vaccine. And if there is a seasonality in the virus, it's probably likely to come back to some extent. But yeah, it will be a volatile market, very interesting. from an active management point of view. So we are excited, and probably a correction might start before the end of the month. Thank you very much.